Alright, what's going on everyone? I'm back with a new video. So today I just wanted to show you guys how you can essentially formulate a plan and not be essentially stuck on a certain underlying bias, and just show you your plan and the underlying confluences that you have. So essentially going into today, I mean the whole week pretty much, the market has been kind of one-time firming higher, apart from yesterday. I'll just show you on the graph. We've been one-time firming higher for the entire week, as you can see. Kind of four profiles there, one-time firming higher, and yeah. However, the thing with that is, as you may notice, kind of every single one of these has either a very prominent POC or a failed POC, such as these two ones. So meaning that most likely we could retest this POC sooner or later. But even more so, these failed POCs, as they represent essentially longs getting into positions at very bad prices, and which are usually vulnerable for liquidation. So usually you would either see something like this, or you would see this POC getting revisited the very next session, or pretty soon. So what we had yesterday as a profile was kind of no exception to that, just that it was kind of the other way around, surprisingly. But again, we still had another two naked POC references, so we actually have a lot of them. But going to yesterday, the spike was not on the upside, as I said, it was on the downside. At the end, they didn't even actually notice this, and also kind of happened on the Russell. If I just remove the overnight, it kind of also happened on the Russell. However, the thing with this one was that it actually had a weak low here, as you can see, which it actually repaired an M here, which obviously kind of skewed trading opportunities for today, even though there might have been a long here. I need to check that out later on. But if we go back to this, there was not much opportunities for long, obviously. Why? Because as you can see, value is shifting down. If we take a look at the change references, such as this afternoon pullback low, which is my green line on the chart, well, you can obviously see that acceptance was found below it, meaning that there is most likely bearish change. However, in my plan, I always go for both sides, right? So even though the main kind of objective this week was that the market was getting, I'm always kind of straightforward here, getting excessively long, but it should be most likely, or maybe getting too long, excessively long, because of all of these failed POCs, etc. Weak low, we have a kind of a weak low down there at some point, even though it's kind of less relevant as we one-time firming higher, it's become less and less relevant. But also there was a couple of stuff that could help us into a possible long position. So that was obviously this prominent POC here, and obviously this failed POC here. However, the thing is that if you take a look at my plan here, the best play today would have been a short like this, going into all of that kind of poor structure towards the downside. However, this morning when I wake up, I just realized that we were actually kind of already trading above this spike, like significantly above this spike, which is pretty unusual, to be honest. Like if you wake up like in the morning of the next session, and we're already trading like largely above the spike base, and most likely we're not going to get back below it, or maybe we're going to get back inside the spike, obviously, but below it, that's a pretty tough move for an overnight inventory, right? So we were somewhere around there, and we ended up opening not so far off, but just exactly right at POC, which you will see that it will come into play pretty significantly. Why do I say that? Well, obviously, since we have this failed POC and all of that, my first reaction at the open was to obviously respect my probability model. So if you're in a mentorship, you will or already know about the probability model, which should always be equal or larger to 4. So in this case, in order for it to be at least 4, we needed to have a bit of non-trend single prints, which eventually came along. We had all of this, or a bit more like all of that as non-trend singles. Not too much, but in my eyes it's enough. And then we opened obviously red-eyed POC, so the probabilities of getting rotational they are even higher. And on top of that, I believe this is if the move down was obviously just a simple manipulation of the overnight inventory. Since obviously the overnight inventory was fully long, I'll just show you guys. It was fully long above a settlement, so therefore there's about a 70% chance that we get a counter auction to overnight inventory. And obviously there was the spike base, which I personally count as a full-on reference, like by itself. I can't say that about all references, aside from obviously the spike base and the afternoon rally high or pullback low, which are all change, as I call them, change references. However, the part where I got pretty unlucky today, so in spite of this trade being really high probability, I got pretty unlucky. So since in the morning I usually look for the market to kind of dive below the spike, like even for a tick, I usually wait for it to do that, because it usually always does that. Like, believe me, it always does that. But today it just didn't. It just didn't want to. Like, if you guys take a look at this, it obviously missed my entry by literally a tick. So that's great. It's yeah, it missed my entry by a tick. And yeah, and then obviously hit all the upside destinations, which were, I'll just show you guys. So obviously the failed POC, which you already tested. Usually when you get non-trend signals, you want at least half of them to get filled. And the final one was the prominent POC, even though I don't know if I would have held until up there. But, I mean, if I would have held past C period, probably yeah. But if not, yeah, it's still a pretty massive trade. But yeah. So this just goes to show you that anything could really happen if you know your way around the market profile. Yesterday afternoon, I was really thinking that today we were going to continue towards the downside, but then when I woke up, we were trading above the spike base, so everything in my plan had to change, had to adapt. But then again, the market gave me the correct factors and confluences for me to be confident towards this setup. Even though I'm not gonna lie, like before the market, I was still thinking like, okay, would this be an objective thing to do? And then I thought, obviously, yeah, if we get all of these, the overnight, the open, and the non-trend signals at the spike, it's a purely objective trade. But unfortunately, I got really unlucky with that one tick, literally one tick above my entry. But yeah, so I'll just show you, like, this kind of goes to show that if we look at the S&P here on the daily chart, I mean, it's pretty interesting, to be honest. And we kind of get a 3-day balance here, and we're kind of surrounded by this a lot of really liquidity that should be pretty soon. It should be grabbed pretty soon. We have some equal highs here, but then towards the downside we have even more liquidity. Also, by the way, I'm on the continuous contract. I'm trading view. I don't really care about trading view like for futures, so I just found that one. So this should be equals if you got on the current contract. You got equal lows, liquidity void, and you kind of get a small fair value gap. Even though I'm not sure it really is one, but it's still kind of a liquidity void there. So yeah, I'm really looking, like, in the next few sessions, I'm looking for liquidity to get grabbed on either side. Even though tomorrow, I'm not sure I'll be trading tomorrow, but But yeah, since we have this balance here, we'll see what happens out of it. Obviously the value is kind of overlapping to higher, we get acceptance above this, so we may actually look to continue one time frame higher. Obviously the best scenario for this, the highest confidence scenario would be obviously a gap higher, and then we continue towards upper references. But yeah. So yeah, guys, don't hesitate to join the Discord if you haven't already. Check out the mentorship. And yeah, I hope you enjoyed this video. I'll see you in the next one.